Consult an advisor or conduct your own due diligence when making financial decisions. General principles discussed during this program do not constitute personal advice. This program is furnished by Dentist Advisors, a registered investment advisor. This is Dentist Money. Now, here's your host, Reese Harper.
Welcome to the Dentist Money blog on DentalEconomics.com, where we help dentists make smart financial decisions. I'm your host, Reese Harper, here with my co-host, Sir Ryan Isaac.
Hey, Reese, are you ready to talk about gold today?
I'm always ready to talk about gold, Ryan. It's my favorite precious metal.
Above diamonds?
Is that a metal?
No, I don't know. Anyway.
Precious metal is not a diamond.
It's a very precious commodity. It just seems like I would have picked that one. Well, it's a hot topic right now, so that's good we picked it. There's something about gold that just it gets people excited.
It's the universal symbol of wealth. That's what you get when you conquest territories, mine, dig up the earth.
So I have a gold chain on right now.
Yep. People really worship the stuff, like literally. You may not know that.
Are you? Is that a biblical reference, like golden calf? We going there?
No.
Okay.
You might want to go back into history, but I'm not going that far.
Okay, yeah. I don't want to go that far. I thought we'd talk about, we can go a little bit further back in history, not that far.
Do it.
California gold rush. Let's talk about that for a second, because I think that's a good example of the influence gold can have on people.
Yeah, I think it's time we dive into a little bit of a history lesson here, right?
So, in 1848, a carpenter named James Marshall was building a sawmill for a guy named John Sutter. You know old John Sutter.
Yep. Old Man Sutter.
Old Man Sutter. And he found flakes of gold in a river at the base of the Sierra Nevada mountains. So Sutter, he wanted to keep it a secret, but he couldn't. The word got out, and people from all over the world started getting gold fever, as they call it in the business, and moving to California.
I kind of have it right now.
You have gold fever.
Yep.
Maybe that's the title of the podcast.
Gold fever.
I love gold. It's a quote from Goldmember.
Yeah, and I think it was a pretty big migration, right?
It was big, yeah. At the time, California's population was about 160,000. By the mid-1850s, it was tripled. It had tripled to more than 450,000 people. So, yeah, the largest.
And now there's more people than that in Long Beach.
Probably more. Yep. So, and there were plenty of success stories, though. A lot of people actually did get rich. There was about $2 billion worth of gold extracted from the ground during the gold rush.
Wow. That's a lot of gold. It's a lot of nuggets.
It's a lot of
nuggets.
How many
pounds would that be?
I knew you were going to ask that. I have the information right here. It was actually about 750,000 pounds of gold.
Interesting.
Yeah. So the interesting part about this story, though, was it wasn't necessarily just the miners who made the money. It wasn't even the miners who made the most money. It was actually the merchants who opened up businesses in the area to serve the miners. So some famous businessmen actually got their start by supplying goods and services and supplies to the gold miners.
Okay.
So a couple examples.
Yeah.
Because I know you're curious. You want to know?
I was going to ask a couple questions, but you're going to supply examples. I won't ask them.
Examples forthcoming. John Studebaker, well known for his automobiles. You had a Studebaker, didn't you, in college?
Mm-hmm.
Okay.
Those were like extinct by the time I was born.
He got a start. He manufactured wheelbarrows for the miners. You had a couple of gentlemen by the names of Henry Wells and William Fargo. They moved to San Francisco to open a bank called Wells Fargo.
Yeah, I remember that.
There was a guy named Levi Strauss.
He made hot dogs?
What he made? He made hot dogs. He moved to San Francisco, as people do now too.
Yeah,
that's where they always used to go.
Dude, everyone goes to Silicon Valley. It's the valley.
It used to be that way.
He went to sell canvas like tarps or something.
Yeah, he started canvas tarps and wagon covers, and then eventually started making denim jeans, which we know today as Levi's.
Yeah, which are making a comeback.
Are they?
They were kind of dead, and now they're really making a comeback.
You're a Wrangler guy.
Nope, I'm not.
Okay. Okay.
I'm like a pretend cowboy, but I'm not really one.
If you're pretend, I don't know what that leaves me. But anyway, so the reason for this history lesson, though, is because we're seeing another gold rush take place kind of as we speak.
That's right. I saw a Bloomberg article this month, and the headline said investors are piling back into gold. I think it was like they're piling back into gold in droves or droves or
masses
like
in droves.
Yeah.
Everybody.
It really was exciting.
Oh, I've noticed. I mean, you see more advertisements on TV and billboards, and that's kind of your signal right there that it might be on the move.
Anytime you want to make a good investment decision, just base it on the daily TV commercial volume that you see.
Yeah.
Not really, folks. Don't quote me on that, okay?
All right.
That was a joke. Subtle humor.
Subtle humor. There was a facial expression to go along with the sarcasm.
You couldn't see it.
It indicated
Yep.
it was a joke. Okay. But we do probably have, though, a lot of listeners who are wondering whether gold right now is a viable investment option. So maybe wondering if it's time to jump on the bandwagon or, in some people's minds, just diversify a little bit.
Yeah, it's interesting to see gold making its way back into the news. It reminds me of 2011 when gold prices hit their peak. Gold was about $1,900 an ounce in 2011, the peak there, and then it took a little bit of a nosedive. By a little bit, I mean it went down a lot. It went down to less than $1,100 an ounce by 2015. But over the last few months, we've seen that number get closer to $1,300 an ounce, and so people are starting to wonder if gold's on its way back.
Yeah, I can remember you talking to me about all the gold requests that we had during 2011. It was an unusually high demand period, and I can't actually believe that it's been 5 years since then.
Totally. And the Bloomberg article talks about how prices of gold have rallied 22% this year, which seems really good.
Yeah.
But I'm going to go on a little rant here that you might not want me to go on, but let's do this.
No. I want you to go on a rant. Is this an official segment now, like the Reese Harper rant segment?
We need to have the producers play the bell
music
or some kind of a horn.
Maybe like a deep foghorn.
Cue rant.
Yeah.
So here's the thing. If you read something that says something's gone up by a certain percentage, especially the idea that gold's rallied 22%, that might be a little overzealous. And returns get pretty deceptive if you take them at face value. Because everyone knows this, but you have to kind of do the math to think about it, which is it takes a lot more return going up than you think to get back to where you were. So if you have $100 and it goes down 50%, then you're going to have how much, Ryan?
I got the 10B2 out here, punching the numbers, carry the 3. You're down to 50.
Yep. But if you have a 50% gain right after that, to offset your 50% loss, then where you at?
50% gain on $50 gets you only back up to $75.
Exactly. So anytime you have a loss, you have to have a much larger gain to recover the asset's value. In the case of gold, let's just use round numbers and say we went from $1,900 an ounce in 2011 to $1,100 an ounce in 2015. That's like a 42% drop-ish.
Yeah, but 42%, that's not going to get you back to the 1900 spot.
No, you'd need a gain of somewhere in the 70 to 75% range to get back to where it was. So all I'm saying is if you're going to call it a rally, make sure and keep it in perspective. And I think I want to say one other thing. There might be 4 or 5 other things.
4 or 5. Okay, the rant continues.
Yeah,
Go on.
It's really interesting, too, to watch how investors want to buy gold at peaks. Your buddy, William Devane, do you know him?
William Devane.
He gets on primetime TV. It's got this really slow, trustworthy drawl.
Yeah.
Talks about the crooked government with printed money, phony, and somehow it seems like gold is like the only solution to protecting our country's future. And there's bombs going off. It's insane.
I was gonna ask William Devane, but I think I've seen him somewhere before, haven't I?
Yeah, he's on. Do you ever watch 24? Jack Bauer.
I think I saw 8 of the 24 hours.
Okay.
His daughter just kept getting kidnapped over and over and over again.
Better.
I thought, come
That's
on, man.
season 1.
There's a way around this.
True Jack Bauer disciples followed him clear through 8 or 9 seasons.
Maybe I'll go back to it.
Anyway, William Devane was the president of the United States in the last season of 24.
Oh, okay.
So he's endlessly defending the integrity of the U.S. government, its currency. He's all things libertarian, political. I mean, he's just he's a man of his word.
It's kind of ironic now, right? Yeah. That he went from that to what he's doing. I saw this and then I had to go Google the commercial.
Yeah.
And you were just saying this. There's a scene where he's political unrest, and it shows wars and fighting, and there's these bombing sound effects going on
from cannons from the 1700s.
And then my other favorite part, besides the fact that he's in front of a crackling fire, and it looks very comfortable, is that he's counting the coins on his desk, and it zooms in close up shot to his hands, and he's like, I even love touching and the feel of gold.
Yeah.
Right. It's very personal. I trusted him on that, though.
For those of you who haven't watched it, go watch the commercial. Google William Devane and check out
gold commercial.
Gold commercial for Rosalind Capital. That was
that's
one.
it. That's it.
Somehow Ryan's gonna get in trouble for having me drop that, but
okay.
Rosalind
we'll
Capital.
Edit it if needs be.
So I'm not saying it's bad. Okay, I'm just saying it's really overhyped. Okay, so it's funny though. He was the leader of the free world. getting paid to like support the country, but then 6 months later he gets paid to tell everyone what a scam it is.
Yeah, how bad the world is.
The government's ending.
Okay, so on a serious note, then what do people need to know about gold? You know, it's not all bad, is it? You know, you seem like you're really hating it. It kind of makes me want to pick up some for myself now. I'm the old contrarian play.
You'd go.
You don't
buy
like it,
right
so
now.
I'm like, fine, I'm gonna go get some.
So here's the thing. That's one of the facts about gold. When you have a lot of economic problems, turmoil, you know, whether it's perceived or whether it's real, gold tends to go up in value. And on the other hand, when we have good economic periods where we have expansion or a healthy economy, gold tends to decline in value. And so the most like recently cited benefits that you'll hear old Rosalind Capital throw out in their article, you know, or their online guide or their book about gold that you can get for free and then buy some. They'll talk about it has a strong long-term return. So gold's going to go up really a long ways over time. It provides a good hedge against inflation. And it is like a safe haven during turbulent times. So it's not correlated with your other assets. I mean, it doesn't move in the same direction as some of the other things you own. So it's a hedge against inflation. It's not correlated to other assets, and it gives you a nice long-term return. But if you dig into the numbers a little bit more, you'll see that all these benefits aren't quite as consistent as they're advertised.
Okay, so I'm assuming you're going to list the benefits, but I'm just going to disclaimer, I'm not convinced still, and I kind of still want to listen to him because here's the other thing I forgot to mention I loved about that commercial is at the end, they stole a line from Capital One, and he locks it in his safe behind the picture of like George Washington or something, and he's like, what's in your safe?
Yeah, I saw that.
So there's just something about that and the cowboy hat and a gold IRA that just feels right, especially, you know, after all that warfare and bombing noises. So what are the, you know, what benefits does he have?
Well, what safe are you going to get? That's my question. You're going to get the gold, and you're going to get the safe.
It was a small safe. It looked like maybe 30 gold coins.
Let's start with the first claim. Gold provides a solid long-term return. You've probably heard the word the gold standard.
Yes.
You ever heard that?
You referred to me as the gold standard usually.
Yeah.
Okay.
Yeah, usually. But most people really don't know what that means outside of your fan club.
Okay.
But the US dollar, used to equal the value of a certain quantity of gold. It was like 1.6 ounces or something like that. 1.62. It's like in the 1700s they started pegging the value of a dollar to the actual ounce of gold that it represented, and that it stuck with it, you know, over a really long period of time. So you could actually pay for stuff with a few ounces of gold or with dollars. Okay, you could just like decide.
What if you had a brick? Do you just go to the cashier at the grocery store and shave off a couple peelings?
Yes.
Okay.
We'll talk about that.
Okay.
But it's so what happened though is over a long period of time, it's really hard to like do trade with other countries if some countries like aren't on the gold standard and you are, and like economies, once we get as big as they are now, it's really hard to have everyone be like stuck to the gold standard because, you know, gold's worth a lot and things still, you know, cost smaller amounts of dollars. It just gets really complex. So during the, you know, the gold standard like persisted till 1971. And in 1971, President Nixon said, we're not going to do it anymore. We're off the gold standard. Okay. So that's the first time when you could have ever even started measuring the difference between how much gold went up compared to how much a dollar bill went up. That's when it kind of started. So,
okay.
Anyway.
That's interesting. So, but I mean, back to my question, I'm kind of fascinated by this. People would actually exchange gold or currency.
Yeah, you could like pay
for a loaf of bread.
Yeah, you could. I mean, you could pay for stuff back in the day with like gold coins and different, you know, different levels, different like types of gold coins had different amounts of real gold in them. So different coins bought different amounts of goods.
Okay, so then it went off in 1971 though, and then they set a price.
Yeah, they said it's $38 an ounce for gold now. And from then, the government started letting the price of gold kind of float around and trade, right? And it was independent from the dollar. And for a while, like people from I don't know how much of a history lesson people are going to want, so I'll make this brief. But from like 1933 till 1975, you couldn't even buy gold. Like you couldn't own it. The government wouldn't allow families to like have gold on hand. You could have like small quantities because you wouldn't get audited, but it was illegal to amass gold until 1975, which he said, okay, consumers can have it and buy it and trade it now. So what happened is when the gold standard stopped in 1971, we went on for a long period of time where gold and dollars started having different values, and people that sell gold, like your buddy at Roslyn Capital with his cowboy hat,
Yep.
that's when they'll start saying, look how gold has done relative to the dollar, because that's when you could start like pegging its price.
Ever since 71. Mm-hmm. Okay, so what has the price of gold done then historically since then?
Well, since there's been really two high return periods, the 70s and then in the 2000s, mostly because those are like really highly stressful financial periods. The 70s, you had a lot of you had a lot of wars, you had a bunch of a really severe bear market in 1973, you had two like global oil shocks in 73 and 79. You had conflicts in the Middle East. You had Cold War tensions. It was a really like crazy period in the 70s. And then gold actually went up quite a bit in the 70s, but you couldn't even own gold from 1971 to 1975. It wasn't legal. So people really couldn't have owned it until like 1975. So from 75 to the end of 79, it went up quite a bit if you were lucky enough to buy it at that point. And then in the 2000s, it went up a lot. We had another period kind of like the 70s where you had...
Yeah, sounds just like it.
Yeah, I mean, it was a really messy period. So you can probably remember some of the things that happened in the 2000s.
Well, I mean, it's funny as you list the things that happened in the 70s. This reminds me of the conversations we have a lot where people say it's different this time.
Yeah.
It's political turmoil, commodity prices,
several major wars,
bear markets,
you had
wars,
a huge stock market crash with the tech bubble. You had a financial crisis, a real estate bubble.
Yeah.
You had 9/11. You had global jihad and terrorism. I mean, it was crazy.
Okay, so what about my childhood, my glory days of the 80s and 90s?
Gold during the 80s and 90s was one of the worst. It's the worst performing period it's ever had. All through the 80s and 90s, if you look over 20 years, it lost over 6% a year for 20 years.
Lost 6 over 20 years.
Over 6, I think it was like 6.2. So for 20 years straight, I mean, you lost money. And during that same time, a lot of other assets went up a lot. Like United States stocks went up 13.3% annually over that 20-year period. And it's a huge contrast. So from a long-term perspective, if you compare gold from 1971 clear until now, especially today where it's not on its peak. It peaked in 2011, and it's down quite a bit since then still. It hasn't really performed as well as a lot of other investments, especially U.S. stocks, come over that period. Over short isolated periods, you could say that gold has gone up really quickly.
Or appreciated, fast.
Yeah, it's appreciated quickly when there's a lot of stress or economic problems. So anyway, its appreciation though is like really unpredictable, and it's isolated to periods when people really want it bad and there's a high demand. So investors who try to time the movement of when that's going to happen expose their money to a lot higher risk and the opportunity cost of missing out on growth in other asset classes.
Okay, so one of the other reasons you mentioned was inflation hedge. So what about an inflation hedge? How does gold help or not help?
Yeah, it depends on the time period you look at. But over a long, let's say take 1980 to 2011. I mean, if you take it from its peak, which I'm giving it a huge advantage by giving it its peak value of $1,900 an ounce, because the end of 2011, I mean, compared to right now, we're down 30-something%.
Right.
But if you take it from 1980 to 2011, I mean, it was gold. The value, $1 of gold in 1980 would have been worth, about the same as what it is today. So it's $1.04 today, and it was worth $1 then.
So no
inflation protection over that
hedge
period of time.
Okay.
If you isolate it over short periods like the late 70s or just in the 2000s, it looks pretty good. But when you take 1980 and 90s into account, it's not really a good inflation hedge.
Okay, so after all you just mentioned, what are you saying? Are you saying I should buy gold?
Yes, exactly. No, so how many people in 2011 do you think listened to your buddy at Roslyn Capital or Glenn Beck,
my other buddy,
however many people,
yes,
and just followed gold off the cliff in 2011? So everyone piles up all their money into gold right after this massive period of gold appreciation, and then it falls off a cliff, and a lot of people that are listening to these commercials aren't young, high earning career people. They're people at the end of their career that are really fearful. That's why your buddy William
he has an appeal.
Yeah, he has an appeal, a demographic appeal.
Okay.
And I don't know, I just feel like a lot of people followed that advice, and they look at this guy that's pretending to be the president of the United States in 24, and he then fronts Roslyn Capital, and we're not, really sure why we're doing this. We're just buying gold because we feel good about it, and emotionally we get excited. And I don't know. It's just, I just wonder at some point when someone at the bottom of an economic collapse is sitting there and they've got all their money converted to gold, and they're wondering, what are they going to do? Because the world's over, right, at this point.
Let's say we're neighbors. You're that guy in your bunker with gold, and I've got some bread and water next door.
Yeah, the world's totally done. Okay, you have all your gold. I have like my worthless dollars that are now like trading for nothing, and no one really wants to take them.
Okay.
No one's taking gold shavings, and no one's accepting dollars. Like gold wasn't worth anything when there was no currency. So at the end of the day, when there isn't any food to buy and your baker's out of business and everyone's not selling anything, and you've got gold and I have worthless dollars, like there's not really a difference, and I just feel like the most likely outcome of what's going to happen when there is a crisis is dollars are going to be worth less and inflation will pick up and it's harder to buy things. A loaf of bread might cost $6 instead of $4. Mine already does cost $6 because I buy that good bread.
You buy the good with all the seeds on it.
But things will cost more, and if you have currency, if you have liquid cash, if you have money that you can actually use instead of going to the store and shaving off an edge of your gold coin to buy that loaf of bread, you'll be able to function. And the more cash you have, the longer you can last through not just cash, but the more currency that you have, the more you'll be able to last through tough economic periods. And when you convert everything into hard assets, it's just hard to survive. So I just don't know why people feel like that's such a safe haven, but anyway.
Well, let's revisit the idea then from our gold rush story in the beginning about the people who ended up profiting the most from the gold rush. So in the California rush, it was all the bankers, hotel owners, equipment suppliers who came out ahead the most, right? And so when we see these spikes in gold and investors start flocking, who's the real beneficiary?
Yeah, well, I guess if it's possible, if you timed it right, investors could profit the most. It's just like if you were a gold prospector in California and you got there really early and started mining on the right little beach of little sand there, you probably struck it rich and made tons of money. But generally, it's really hard to time the gold market, just like any other asset, and I wouldn't recommend doing that. At the end of the day, most of the time, other people are the people that profit off of your transactions. When you buy gold, more people make money transacting gold than the people that own it. And that's something to consider over a short period of time. Long term, it's not like it doesn't appreciate. It's just not the boon of like safety, inflation hedging, and long-term growth that everyone feels like it is when they buy it. It's the brokers, the salespeople, the corporations. They make a lot of money, just like Levi Strauss did in the gold rush days.
So the guy in front of the crackling fire, he's going to be okay as a result of me investing heavily.
Yeah. So
okay. So what we're not saying avoid gold as an investment. Don't avoid it. It's not a scam.
Yeah.
We're saying
if you want to invest in gold, I'm going to give you a couple pieces of advice. Don't place any big bets. Don't take a large portion of your portfolio and allocate it to gold. I wouldn't put more than 5% of my portfolio in precious metals or commodities, let alone gold. That's about the maximum of what exposure I'd want to have. And that's if you're a 100% stock investor. If you are wanting a safe experience, gold isn't an asset class that's going to give you a meaningful trade-off. It's not going to meaningfully increase your diversification. It's not going to offer you a higher expected return. And I don't view gold as a way to make profits over the long term based on the risk profile it has. It just goes up and down too much. And it's really unpredictable as an investment. It also doesn't give you anything back. You just have to hold it. There's no dividends. There's no income. It doesn't produce anything. It's just it's a good store of value, but it's really unpredictable in terms of when that store of value is going to appreciate. So
okay, so don't try to time it. It's not worth the risk trying to time it.
Yeah.
Okay.
And it doesn't provide diversification. Like we were saying in the beginning, you got long-term returns. They're not there. The inflation hedge isn't there. And I just think that those things are the reason people own it.
Okay, so the message we always want to share with dentists is that we say this all the time, you don't need to strike it rich with lucky investment, right? You don't need to hit that home run. You're in a great position to build wealth responsibly over time, stay diversified, let the market play itself out. Don't get caught up in all the buzz over the investment of the week or the best commercial you just saw or the talk show guy pitching it, right?
Yeah, I love this quote from, this is my favorite gold quote, and it's from Warren Buffett in his 2012 letter to shareholders. He says, Today, the world's gold stock is about 170,000 metric tons. If it were all melded together, it would form a cube of about 68 feet per side, which fits inside of a baseball field, basically, for people who can't envision that. And at $17.50 per ounce, which is a lot higher than it is today. Like, he was writing this quote, in 2012, and it was a lot. Today we're sub 1,300. At $17.50 per ounce, it would be worth $9.6 trillion. That's a lot of value, right? Mm-hmm. But he says with the same amount of money, you could buy all U.S. cropland. That's like every farm in the whole country, okay? Which is 400 million acres with an output of $200 billion annually.
Okay.
You could also buy ExxonMobil 16 times. You could buy 16 ExxonMobils, which is the world's most profitable company. It earns more than $40 billion a year, and you'd still have $1 trillion in cash. So you kind of have to look at that and go, would I rather own every farm in the whole country plus the most profitable company in the country that's
16 times over,
that's selling things that people need to consume 16 times over, making a profit, providing me with an income? Or do I want to own something, a teeny piece of something that can fit within the professional baseball field's infield, And I don't know. As for me, I prefer investing in things that give me something back, and so does Mr. Buffett. And in my experience, most successful investors feel the same way.
Okay. Although I do have to say, if you did have like a 68-foot long piece of gold, it would look pretty cool in like a front yard or something, if we're being honest. Okay. So let's leave our listeners then with a famous poem, as we always do, about gold, penned by Robert Frost.
Yes, and it was immortalized by Ponyboy in the classic story of The Outsiders.
Okay, this is for those of you who wonder if gold has staying power as an investment strategy. Here's the poem. Nature's first green is gold, her hardest hue to hold, her early leaf's a flower, but only so an hour. Then leaf subsides to leaf, so Eden sank to grief, so dawn goes down today, nothing gold can stay.
That's beautiful, Rye.
It's a good reading. I do that on weekends in coffee shops.
Thank you for that beautiful reading.
Okay, and with that, let's call it a show. Thanks to all of our listeners for joining us. Remember to leave us a review on this podcast on iTunes. For more information, you can follow us on Facebook. You can go to the website dentistadvisors.com. You can sign up for our free newsletter or schedule an appointment on our calendar. We also have our phone number on the website. Give us a call anytime. We'd be happy to chat.
Carry on.